The stock market has officially turned upside down. Does this mean that the United States of America is on the verge of entering a recession? If you were to search for the word disaster in the dictionary, for instance, the Intel ticker would be displayed. This is the highest percentage of unemployment in over 3 years, with the rate of unemployment reaching 4.3%. During the meeting that took place yesterday, the central bank maintained its position that interest rates would remain unchanged for the 8th meeting in a row. This decision opens the door for a rate decrease in September, just before the significant investment in the presidential election. Is there a dump of stocks taking place now that the NASDAQ has officially entered the category of correction? As an illustration, Warren Buffett recently sold around 1/3 of his overall role at Apple, even after the company announced that it had achieved a record profit for the most recent fiscal quarter. In the following section, we will investigate the factors that are contributing to the current decline in the major markets. However, before we do so, let's have a look at some specific equities that have been affected by the most challenging. So let's begin with Intel, stock of intelligence. During the trading day, the stock witnessed a fall of 26%, making it the worst day of trading since 1974. Immediately after the results report was released, this alone caused a loss of about $30 billion in value. Layoffs are the primary reason for the sale of the technology giant's shares. As a component of the $10 billion cost-cutting effort, Intel announced that they will be decreasing their staff by approximately 15%. Intel has also admitted that they have not been able to keep up with significant breakthroughs, such as artificial intelligence, and that this is something that they have acknowledged. In the second quarter of 2024, Intel reported a shocking financial loss of $1.6 billion, which is comparable to a net income decline of $1.5 billion when compared to the same period in the previous year. Because 2023 has come to a close, the stock of Intel has experienced a significant decrease, and the overall decline in the stock from its peak is currently almost 58%. Remember that this is not just any other growing stock in the technology industry. Intel, which is one of the most well-known blue-chip stocks in the United States and is regarded as a leader in the sector, is included in the Dow Jones Industrial Average. If this pattern continues, it is possible that their standing will be challenged. The stock of Amazon asterisk. A little less than 9% of Amazon's stock plummeted on Friday after the company reported its profits. This marked the largest one-day dip that Amazon has had in recent years, and it resulted in a decrease in the overall market value of nearly $134 billion for the enormous online retailer. The deficit in revenue expectations for the second quarter of 2024 that Amazon has experienced is noteworthy, even though we are going to discuss other, more general factors for this huge tech sell-off on the following page. There was a difference of $600 million between the anticipated sales of $148.5 billion and the actual revenue of $147.5 billion that Amazon announced overall. Not a lack of revenue at the root of the problem. Amazon's bad prognosis for the third quarter of 2024 was the primary factor that led to this large sale. Revenue projections for the quarter range from $154 billion to $158.5 billion, while operating income is predicted to range between $11.5 billion and $15 billion, which is significantly lower than projections of $15.2 billion. However, even though Amazon's cloud business did exceed sales predictions, the company's stock is currently down almost 16% overall, continuing the decline that began in July when it reached its highest point. Microsoft's stock exchange Microsoft is going to be included in the huge tech sell-off at this point. Microsoft's earnings during the second quarter of 2024 were quite robust, surpassing both the earnings per share and revenue estimates made by Wall Street. A sell-off was brought about, however, as a result of a minor oversight in the cloud sector, particularly in the intelligence area of the cloud. Following the release of the earnings report, Microsoft's stock initially experienced a decline of 7%, although it has since improved marginally. The stock of Microsoft is currently trading at a somewhat lower level overall, approximately 12.5% down from its peak in July. Bank stocks are being sold for profit. Banks also experienced significant losses on Friday. Bank of America shares experienced a fall of about 5% on Friday, bringing the whole decline to a level that is 15% lower than the highs reached in July. The sale of assets that were worth billions of dollars by Warren Buffett was a contributing factor in this situation. In the same way, the sell-off had an effect on Wells Fargo, which had a decline of roughly 6.5% merely during the trading session on Friday. What is the reason for this significant sell-off in the stock market in the United States? 1. Jobs report for July. Specifically, the jobs report that was released on Friday is the key reason for the big market sell-off that occurred. This is a significant increase over the previous month's total of 216,000 jobs and the prior month's total of 179,000 jobs. As a result of the substantially lower rate of job growth than was predicted, fears about an economic downturn have been raised. As an additional point of interest, the overall unemployment rate in July, which is the highest rate since October 2021. This is in contrast to the 3.7% rate that was recorded in June. 2. Interest rates. The second key factor that is contributing to this market sell-off is the current interest rate environment. Many people anticipated that the Federal Reserve would eventually reduce interest rates because there were clear indications that the economy was slowing down and that inflation was beginning to decrease. At the most recent meeting, which took place on Wednesday, interest rates remained unchanged at a level that was the highest it had been in 23 years. The Federal Reserve has been pointing to a robust labor market as evidence that the economy is performing well. However, new data indicates that there may be a slowdown in the labor market. The Federal Reserve has been accused of being too slow in handling inflation, which has resulted in rates remaining too high, which poses a risk of slowing down the economy. There is evidence that a fall in interest rates could be advantageous for the economy by reducing the costs of borrowing money. This is because inflation is currently at 3.3%, which is still higher than the long-term target of 2% that the Federal Reserve has set. 3. Disappointment about artificial intelligence. The reason for this huge market sell-off is also connected to the major technology stocks and a broad disenchantment with artificial intelligence. The vast majority of the world's most prominent corporations are making efforts to join the artificial intelligence bandwagon, which is resulting in significant financial investments. It is without a doubt the case that NVIDIA has reaped the greatest benefits from this trend, while other large technology companies are striving to replicate their success. On the other hand, the substantial investments in artificial intelligence have turned into a barrier to profitability because these expenditures will not instantly pay off. The valuations of the stocks that make up the magnificent 7 inches are so high that they are now priced for perfection. Even a minor negative update might cause a large sell-off to occur in the market with these equities. There is a lot of tension in the stock market right now, and the impending meeting of the Federal Reserve, together with the statistics on employment and inflation, will be key signs of the direction things are heading in. Please let me know what you think of this. Like, subscribe, and comment to support the channel and stay updated with the latest content.